the open and travel may go in the oil markets. This morning, we're seeing oil prices in Asia this morning being, of course, oh, here I am blabbing away to myself and I'm not even unmuted. Okay. Good morning, everybody, and welcome to the Daily Energy Markets podcast, where we are looking at the open in Asia and the direction of travel for today, Monday morning, November 22nd, nearly a month till Christmas. Hard to believe the end of the year is just around the corner. And we've seen the price, the open in Asia, a little bit down, a continuation of the slide that we saw at the end of last week. Now Brent trading firmly below $80 a barrel. Let's welcome in Omar Najia, Global Head of Derivatives for BB Energy, if he's come down off his Liverpool high and is now down on Mother Earth, like the rest of us Arsenal and Man United supporters who live in a different universe, a parallel universe. Omar, your thoughts this Monday morning? Markets looking soft after last week's decline.
Look, I think basically, look, you have to get something in perspective. Okay, so we've been talking for a while about markets topping, all this kind of stuff, and markets did weaken. Do I think that the top is in? No. Okay, even though probably a large majority of people would say that yes, we've come off from whatever it was on WTI 83 something, 84 something, and that we got 85 even, I think, and then we're printing 75 now. But I think this is still a very kind of corrective looking move. It doesn't seem to me that people are convinced, and there's still a little bit of fear of basically selling and being short. And don't forget, they've actually thrown everything they can on this, at the market. So we're supposed to have this coordinated SPR or stock release from every corner of the world, which is ludicrous. But you keep getting these stories, so the market is jittery. But I think at the end of the day, I don't think the high is in. For my sins, I really don't think the high is in.
Do you think, Omar, in some sense, the actual release of the SPR will be bullish for the market, and this threat of it has been the bearish part, and once it's actually the trigger is pulled, we could see the reverse happen?
Yeah, I think that's possible. But even, it's just ludicrous to think that the US and Japan and India and China and whoever are going to basically coordinate to release oil to who exactly? And at the same time, and for the greater good, I'm not a believer in the kind of greater good, and everybody has to be shoulder to shoulder and all this kind of stuff. So I think it's just, I think that the threat of it, as you were saying, is the actual fear. But I think that's going to dissipate. So we're going to see, I think, very early this week, Monday, Tuesday, Wednesday, if the market is going to turn tail and say, right, the high's in and we're just going to sell now, or if basically it's going to turn around. So I think I'd be betting on a turnaround, but we should know sometime this week. So it's either going to start, if we can manage to trade back above 80 on WTI, if we can get those $4.50 back, I think we'll be off to the races. So let's see, but it has to happen at the early part of this week.
Let's welcome Mark Oswald, Chief Economist and Global Strategist at ADM Investor Services International, sitting in London. Mark, it does feel like things have, the glass half full, glass half empty battle seems to have come to some sort of gridlock standstill. Not quite sure which way it's going. We're seeing COVID rear its ugly head again in Europe. And uncertainty in Asia. China's vulnerability seems to be more pronounced every week. Your thoughts as to where the direction of things go?
Well, all we're doing is adding another layer of uncertainty with this latest outbreak of COVID in Europe. I think the lesson from the early part of this year relative to last year was we'll deal with it better again. the biggest threat at the moment, actually, I think is within Europe is probably social unrest, as we've seen. Though I would stress to people watching pictures on the television that the people rioting in the Netherlands, a lot of them are basically a bunch of ne'er-do-wells, basically out for a fight. So I don't think, I think the mood within the political community in Europe is not actually to impose severe lockdowns, though this is sort of like something against the unvaccinated. So it's going to create social tensions. But in terms of the global economy, I think the most reassuring part of the global economy at the moment, and we don't really seem to be emphasizing this enough. About a month ago, I remember everyone telling me that the US economy was basically headed for a pretty dark Q4. Now it's looking pretty good. If you're looking at Asia, okay, there are a lot of uncertainties around China and they're not going to go away in a hurry. It's going through a transition period, having to deal with a lot of the stresses that it's not been dealing with. It's basically been sweeping a lot of things under the carpet. And now they've basically coalesced, so to speak, to come and bite them. But the rest of Asia is bouncing back from that Q3 COVID shock. Yeah, there's no question about it. And when you look at today, say, for instance, at the South Korean exports data, I thought the interesting part, not only was it strong, but actually there was a particular strength in exports of petroleum products, which sort of re-emphasizes the point on oil, really, that this isn't a crude deficit problem. It's a refining or product capacity refining problem. And it's a problem everywhere. And if you're getting countries like South Korea suddenly seeing in excess of 100% increase in its exports of petroleum products, that tells us actually A, demand is strong, and B, we've got capacity constraints, and the capacity constraints and supply bottlenecks aren't going away in any hurry. So
Mark, on the survey result that we were polling yesterday that we just published earlier in this podcast, basically the world economy is doing so well, but why do we feel so bad? And the result of that, as you can see back on the screen, everything looks fragile, COVID and so forth. Your thoughts on that point? We stole that headline from the New York Times, which ran it big over the weekend. Is there truth in that statement? What do you think?
I don't think we feel bad. I think we feel all concerned about the rise in non-discretionary costs. You know, there's energy, there's food, and there's house price related, anything household related in inflation. And that doesn't make people feel good because we're not sort of seeing actually the level of pay rises which is matching inflation. The other side, I think, is more of a concern to me that what really we've done with what's happened with COVID is we've exposed all the fragilities that were there for years, decades in the global economy, you know, and how we've not been investing in our infrastructure. And now that we've got this sort of, let's have a powerful recovery moment, suddenly everyone goes, oh yeah, we haven't got the capacity to do that. So, you know, basically that creates a backlog of orders, which will feed the economy for quite some time, unless we get to the point, and this is where the big danger is, where central banks suddenly throw in the towel and say, we've got to try and do something about this inflation, which is actually futile. There is nothing that central banks, as Bank of England Governor Bailey said at the weekend, they can't create jobs or, you know, fill labor shortages. They can't control energy prices and they can't sort out supply bottlenecks. But if they do press the button, then we are in a slightly different situation.
What makes me feel bad is first world problems, going out to restaurants and paying twice the price for half the service because the waiter's too busy serving, you know, many more tables than before and has never been a waiter before. But Bora Barryman, managing partner, Hormuz Strait Partnership. Bora, this thread of the coordinated SPR release, I mean, the economics of it, you take your analysis of. I'm sort of more interested in the geopolitics of it, in the sense that the 20 plus OPEC plus countries rejecting the outreach from their biggest customers and moving and forcing their biggest customers into these moves. I'm wondering, from your perspective, the optics on this, is there fallout, do you think?
Well, certainly, OPEC needs to keep their customers in mind. In any business, you keep your customers in mind, front and center. But as we saw over the past few weeks, the major customers are signing up to these commitments to phase out oil and to make their industry, to a certain extent, obsolete down the line, while asking them to potentially lower their margins, i.e. OPEC's margins today. So OPEC they're in a difficult position. They're in a difficult position, but I think it's fair enough, right? That the, let's say, advanced economies are releasing their strategic reserves if they feel that this is some type of emergency situation that needs to be allayed somehow. And I do think that certainly it is becoming a political emergency. You can see that around the world, from countries as high as the US to as maybe not so high as Turkey. Inflation is impacting politics. And I don't think countries as diverse and as the US and Turkey are that different. The main kind of trigger behind the inflation is the central bank policy.
You can't blame OPEC. I mean, we have two headlines from Japan today. One is Japan releases massive stimulus package, I think $500 billion. And the second is we're going to lease SPR because the OPEC's oil prices are too high. I mean, what's triggering the oil price? OPEC has no control over ultimately this stimulus all over the world. Correct.
It's a success, right? The central bank policy is a success. People are out, people are spending. They want to import goods from China in the West, and the ships need to be loaded and come into these crowded ports that are unable to handle it, and there are labor shortages. What a success, right? This is what we wanted to create. But what's creating the concern, and I think that's reflected in your poll, is that this has been established on the basis of an extraordinary expansionary policy. Growth is running above trend, right? If we're expecting US growth next year around 4%, that's what the US banks are saying. That's well above trend. What a success. But at the same time, the inflation outlook at the minimum is 5%, according to the major US banks next year. This year it was 6%. So there's a political rumbling amongst, I would call those apolitical masses that are feeling this inflation every day. Where did this come from? We're supposed to have full employment. We're supposed to have easy money. Why does it feel that life is getting more expensive for us?
Well, because it is. Omar, you're holding on to the outlook that there's still one more climb up the mountain here, that we can ascend, that there's another sort of high in this cycle. Is that technical, or is there something demand driven that sees that sort of final peak?
No, it's definitely not demand driven. So it's everything, right? So there's no market that's like an island. Markets can ignore each other for a while, but they rhyme. Okay, it doesn't mean that if one goes up, the other one has to go down and all that kind of stuff that we keep hearing about, but they do rhyme. So I don't think that we have seen peaks in equities, right? So there was a story last week about, it was like the biggest buyer of US equities with $1 trillion as his back. So I clicked it. I was expecting, some company, and it turned out to be share buybacks. So companies are their biggest, they're buying themselves, right? So I don't think we're done in equities. I don't think we're done in commodities, because I don't think we're done with inflation. I don't think we're done with dollar weakness, even though the dollar, in terms of the other currencies, so DXY, the dollar index is going up. I think that's about to turn over. It's again a very difficult call. But bottom line is, I don't think we're done with anything. So oil could be leading the way, but I think the probability is greater, at least for now, that we're going to see new highs and everything basically tick up together because of this, inflationary concern. So if you keep, and I think the other thing to remember is this isn't something that happened in 2021. This is something that's been ongoing since 2008, right? So since 2008, we've been trying to create inflation. And now I think we've finally done it. So this kind of idea that we're going to have growth, I don't see where that growth comes from, because you've got massive debt, economic growth, you've got massive debt. And the only way you can engineer growth is by inflating. And so that's what you're getting. You're inflating the economies. People are using money that's very cheap, that costs nothing, that's basically worthless, to buy themselves and keep buying and buying and buying. And everything seemingly grows. But so everybody's happy because their stock portfolio is going up, blah, 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 blah. But when it comes down to you actually starting to pay for that, school fees, meals, football tickets, all this
bad waiter service,
bad waiter service, all that kind of stuff, I think will come and hit home. So I think whichever way I look at it, I think the market needs it. I like it when markets end with a bang rather than a whimper. It's possible that we're going to end with a whimper, but I really kind of, I doubt it. So I will wait at least a week, maybe a couple of weeks, to kind of gauge how this thing is going. But I'm bullish. I'm bullish everything from Bitcoin to oil to equities higher.
Mark, one of the sort of sages of Wall Street, Jeremy Siegel of Wharton School of Business, has said we're one bad inflation report away from a major correction. You're of the view that the central bankers cannot fight inflation. Do you think you might be proven wrong here? The Fed will be forced to move.
Oh, no. I think there's two different things here on the inflation front. I think they can't, anything that they do to fight inflation will be ineffective.
Right.
That's a completely different issue
Okay.
to them throwing in the towel and saying, well, it's not so transitory, we were wrong. And really, I mean, what we've got is actually two good examples at the moment. We've got the Fed and the Bank of England, because part of whether the markets believe in the central bank still, having been forced to backtrack and say, actually, it's proving to be there's far more traction in this inflation than we expected, is you tell the right story. If you guide markets properly, like the Fed is trying to do, we've had Clarida last week, also some of the archdoves like Evans and Bostich basically saying we may need to bring forward the timeline. You're doing okay. If you've got the Bank of England and you're saying, well, we might hike rates, but then again, we might not, and we're not really sure. And people go, well, what are you doing? So where the danger lies is markets suddenly feel that the central banks are being backed into a corner and lose control of the whole narrative. And it's at a dangerous moment because in quite a lot of places, we are rolling back some of the fiscal support as well. So part of this massive expansion in response to COVID, if we start rolling that all back, then the risks are that things start to get out of control. And I think particularly the big risk for the equity market comes not from the equity market's high valuations itself, but that we see bond yields rise in response to inflation. And we also start to see credit spreads widen quite sharply. And there are some nascent signs that the credit markets aren't quite as happy as they have been, that people aren't willing to buy things at ridiculously tight spreads, particularly in the high yield market. And that's really where I'd be looking for my warning signals. It's not in the equity market, it's in credit markets.
Or your thoughts on that? I mean, this week coming, we do have, I mean, according to Siegel, there will be more reporting this week. We got PMI data and other data that will signal towards this inflation narrative. And we have the expectation that Biden will finally announce the next Fed chairperson, if indeed it's going to remain with Powell or somebody different. How big of a signal do you think these things will be this week, given the sort of fragility of everything else?
Well, I agree with Mark, and I think he was insinuating that certainly U.S. policymakers are kind of shifting the narrative, right? Because are they really in control of the situation? Yes, they can do something with monetary policy, but easier to talk and shift the narrative. So the narrative, I think even Janet Yellen will admit, is that the inflation is not so transitory. So the market should expect more aggressive moves to head off inflation before it gets out of control. So
I mean, I don't think you can go into a midterm election a year from now with this level of price rising at the doorstep. Knock, knock, I'm from the Democratic Party. How are you? Well, I'm really peed
it's
off.
hard to say.
Gasoline is $5 and my bread costs me an extra $1. Get the hell out of here.
I think they're damned if they do and if they're damned if they don't. But certainly now the narrative is that tightening is on the horizon. We cannot let inflation continue, right, beyond this transitory period. And it's accepted that it will remain high through 2022. So that is the election. It will remain high through 2022. That is the consensus now.
That Titanic has hit the iceberg already.
And then we'll have to see, you know, what difficult decisions need to be taken. They could come as soon as the next Fed chairman is appointed, or it could come after the midterm elections, or maybe never, right? Because this is the argument that about credibility. What is the credibility of the Fed when, you know, 20 years ago, only 6 or 7 African, Latin American countries had debt to GDP over 300%, and now most of the OECD is in that position. In a past tightening cycle, you could go up 400 basis points, no problem. Even 500 basis points, no problem. And the prospect of that type of normal tightening just would spook all these investors into the asset classes that are booming now: oil, property, technology, crypto, SPACs. Where would they be with 5% interest? So it's about credibility. If that scenario of tightening is not credible, then we continue on with inflationary dynamics.
Well, it's either or. Let's go to the survey question and have something a bit more immediate to think about here in the oil markets. The triggering of SPR. If we bring up the survey question, the question is whether the actual releasing of the SPR triggers further oil price declines and is a bearish move, or the actual release of SPR will end the slide that we've seen in oil prices and send prices higher. So the actual release of SPR, will it be a bearish or a bullish action for the oil markets? The actual release of the SPR, will it trigger further declines in the oil price, or the opposite, end the decline and trigger upward moves? Omar, it's Monday morning. As we said, oil prices trading well below $80 handle. Your outlook for the week ahead?
So I think higher, but just, and I'm not going to change my opinion for another week or two. And I think basically, you know, with the inflation thing, there's nothing that the central banks can do. There's absolutely nothing. You know, the idea that they're going to raise interest rate means that they're going to, unless you're the US, they're going to all default on their debts. It's impossible. They can't raise interest rates. They can't raise them because, you know, their debt is so massive. So they're going to do absolutely nothing. And if they raise interest rates and spook the market, everybody's going to be crying and forget the midterms, like you were saying. So what do? They'll keep pretending that they want to do something, that they're going to do something. It's like the SPR release. We just pretend and we hope, because talk is all they have. So sooner or later, the markets, be it oil or be it equities or be it Bitcoin, is going to rip the face off the Fed and off the, Bank of England and the European Central Bank. I mean, they've already ripped half their face off, and they'll continue to do it because they are powerless. Literally, they have nothing left. And all this stuff, again, goes back to 2008. Plus, I mean, we've been inflating since 2008 with no real growth. Plus, this year and last year, we had COVID, which we have to pay again trillions of dollars for. So the idea basically that, inflation is going to be anything except rip your face off is funny. I mean, that it'll only be, a little bit, and don't worry. But that's the only thing that they can do. They're not going to raise interest rates. They're not going to spook the markets in any shape, way, or form. All they can do is talk. And eventually, when you keep saying, like you say to a child, you do that again, and I'll smack you, and you don't smack them. You tell them like 3-4 times, you put it on the child. After the 3rd or 5th time, they're going to basically start laughing. And I think, that's the markets for you.
Which one are we on now, Mark? Are we on slap 3 or 4? I mean, ultimately, will there have to be a choice here between Wall Street and Main Street?
Ultimately, there will. I mean, the Wall Street Main Street divide has never been so big. So basically, you see it the whole time. That particularly derivative tails in markets. Part of the oil price fall, I would attribute just to the paper options market. You've seen it in the freight markets recently in derivatives. Suddenly you get a massive crash, and most of it's attributable to the financial part rather than people dealing with the real world. So I think where we're at is that for the moment, we're in Stockholm syndrome. So markets actually like the fact that the central banks are talking a lot, but not doing anything. Then we may actually get into what's also known as Helsinki syndrome, and markets start to question the wisdom of the central banks. And I think we're getting close to that inflection point, as Omar's implying, but I don't think we're going to be there quite yet, because I think above all, because of what we've been through during COVID, people just don't want to believe that things are going to get better, rather than deal with the realities of what COVID's exposed in terms of the global economy, and the fact that, Omar's quite right, at some point we are going to have a debt jubilee. And that's a cold, hard fact. Whether it happens in the next year or two, I don't know. But at some point there will be, because this debt is basically unsustainable.
Oops. Let's give Bora the last word. Set up there with the survey result. Will the actual release of SPR be bearish or bullish for oil prices? 2-1 in this room, at least. Bullish, Bora, as Omar is expecting higher prices. Your thoughts?
Yeah, I'm bullish as well, because this is sort of a intervention in the market, right? But once the intervention is over, the market will take its course, and I think there is that mentality which Omar so eloquently expressed, that the Fed is not credible. So hence this inflationary dynamic and expectation, precisely the expectation that the Fed is chartered to avoid, is taking hold, and assets, liquid assets, are in a bullish dynamic.
And oil would have to be an outlier in order not to reverse to trend back into the 80s. We see the equity markets hitting records still every week, all other commodities doing the same. Why would oil be some kind of outlier as we go into the winter and strong demand into the China New Year?
I don't see any reason for it to be an outlier. And, I think most countries are producing as much as they can. And I don't think, Saudi Arabia is going to, tilt the dynamic.
No, it's not going to suddenly put another 1 million barrels on the market, unless that armada that sits out, about my house here suddenly, takes up anchor and goes away. I think you will have a no extra oil coming from the big players. let's wrap it up there. We've got Brent opening, oil prices opening in Asia again, continuing the trend we saw at the end of last week, downward. Will they turn a corner on the news of this SPR release? This room thinks they will. Let's wait and see. Bora, thank you so much for joining us. Mark, thank you as well. And Omar, in the land of virtual no camera, wherever that is, probably some hungover place. We look forward to seeing you soon. All the best. Take care. Thank you.
Thank you. Thank you.
Thank you.